Well, we've all seen the rising cost of living and energy costs, and during the course of the pandemic, the rise in the trend to staycation, and it's likely that the restriction in consumer spending power may well encourage people to carry on holidaying in the UK. And you may be facing increasing bills on your property, and you may be thinking that that unused annex, or indeed that outbuilding, could be used as an Airbnb cottage for people who want a staycation in the English countryside. So how do you go about doing it? Well, it comes in 3 stages. The first stage in getting an annex or outbuilding ready is to make sure it's suitable for human habitation, and that means you're going to have to go through that building and make sure it contains all the basic necessities for living. It's got to have somewhere to cook, somewhere to bathe, somewhere to go to the toilet, somewhere to sleep naturally, why would you be doing Airbnb, and somewhere to relax. It's got to be suitable for use as a dwelling. More importantly, if you're dealing with an annex, you're probably already up to domestic insulation standards, but if you're converting an outbuilding, you're going to need to think about insulating it, making it green, maybe installing a log burner or some other form of heating. But ultimately, what you are going to need above all else is planning permission, and that could take several months depending on where you are and the state of your property. But let's assume that you can get all that in place. You've now built your annex. What do you do next? Well, Airbnb, running holiday cottages, that's a business of holiday letting. It's actually a trade of holiday letting, and you're going to need to register yourselves with HMRC as having this new trade so that you can do self-assessment returns at the end of the tax year. And that means you're going to need accounting software. Plenty of those available online, some are free, and if you're starting out and have never done bookkeeping before, they're fairly intuitive and fairly simple. But this is where the contrast between buy-to-letting and holiday letting really starts to bear in. If you are renting a property on a short hold tenancy, i.e. as a buy-to-let landlord, the scope of what you can deduct is fairly limited. A little bit of mortgage interest, but you obviously don't get higher income tax relief on that anymore. The cost of repairs, but not the cost of renovations. But generally, your tenants pay the bills, pay the council tax, pay for the telephones, pay for satellite TV. If you're doing Airbnb, and if you want to be a good host, you're probably going to want to put in things like internet, like Sky TV, and equipment that people can use to relax when they're spending their relaxed time indoors. And all of the costs of that are tax deductible. You need to make sure that your annex or converted outbuilding has a separate meter, not necessarily a separate account, so that you can recover part of the costs of electricity and heating against the income that you earn from Airbnb. The important thing is to count everything that you use wholly and exclusively in that business and put it into your accounting software and claim it against your income tax. That way you will maximise the return you get without forgetting to claim deductions that you're legally entitled to. And the big one is capital equipment, of course. If you're spending money on televisions, DVD players, I don't know whether anybody uses them anymore, Wi-Fi, hardware, all of that is eligible for capital allowances as well. So you've got a number of things that you might think, well, it's not really allowable, that's just a fixed capital cost, but you may be entitled to capital allowances. When you've got all that sorted out and you're ready to run, you've got to market it. You've got to get it on Airbnb. You might want to build your own website. Just running through this quickly, down this quick mental checklist, you start to realise just what's involved in starting a business. But don't forget to tell HMRC that you've started, because that's the one element of starting a business that can lead to you being fined. And you don't want to lose a few £100 of what is probably going to be an important but modest addition to your income in your first year because you forgot that one vital step. You're out there now, it's open, you've got guests booked in, you're meeting and greeting them, you're having a linen changeover after every stay, you're having cleaning done, and don't forget you can deduct those costs as well. So everything that goes into running that business on a day-to-day basis, month to month, year to year, can all be deducted. Now, there's a lot of really good online guides for this, and I wouldn't pretend that I know everything there is to know about income taxes. I've been a stamp duty guy for too many years. But look at the resources, because if there's a chance you could make a few £1,000s a year extra for relatively little input now, in these difficult times, doesn't that make a lot of sense? Anyway, to summarise, get your planning permission, do your alterations or conversions as you need, get registered with HMRC, get your accounting software in place so you can track your income and expenses, and ultimately market it. You enjoy the experience and make sure your guests do too, and you'll have a successful Airbnb business. Now, if you've liked this video, please click like and subscribe. If you're living in a property that already has an annex, then you may be entitled to a stamp duty refund, which will actually pay for the work of setting up this business. So if you think you might have overpaid SDLT on your property, click on the link below, send us an email, and we'll do our best to help you get that money back. In the meantime, we'll see you soon. I've been David Hannah, Chairman of Cornerstone Group. Thanks for listening.